Sound check, 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 check. All right, sound check. Hello, hello, hello. Is this working? Okay, guys, good morning. We are 15 minutes away from the open of the London market. All right, so it's Monday, and we've had a bit of holidays. Italy's on a holiday, New Zealand's on a holiday, China's on a bank holiday. Do we have anything in the calendar today? Yes, we have ISM Manufacturing Index from the US at the open later of New York, or an hour after the open of New York. And then we will also be hearing from Fed Chairman Powell. Now, what is the Fed Chairman, or what's the topic? Or what will the Fed Chairman be talking about? I believe he'll be talking about the commercial papers market. So it's not really well, if he follows script, it's not going to be a market moving event. If he follows script. If he says something else, then sure, that's that's something that could move the market if he talks about differently from his supposed topic. But context wise, he'll be talking about the commercial paper market for the US. Now let's get back to that ISM data. So what is ISM? ISM is basically a diffusion index. ISM Manufacturing PMI. So it's a survey of the purchasing managers in the manufacturing industry. The survey is about prices, about production, about supply chains. And anything above 50 is considered to be good for the US. Anything below it will be considered bad. If we look at the numbers later, the consensus forecast, although below 50, calls for an improvement. 49.3 from 48.7. ISM manufacturing prices seem to be ticking up a bit to 70.2. So what are these? These are potentially, if we get as expected numbers, these could potentially be good for the US. Why is that? Well, let's talk about your manufacturing PMI. Yes, it's still a contraction if it's below 50, but at least it hints that there is improvement happening. More important for us is manufacturing prices. So what does that tell you if manufacturing prices goes up? Manufacturing prices goes up, normally that ends up translating to the end users, to the consumers, and that's something that the Fed doesn't really like. That's something that tells the Fed, okay, I'm not going to cut interest rates anytime soon because there could be inflationary pressure down the road because manufacturers are seeing higher costs and raising their prices. So let's see what the data is later. For now, let's take a look at the charts. And what do we have from the charts? It looks like we've had some action already. We actually have a weaker dollar already. You look at your charts and you've had a decent range already for your euro, your GBP, your Aussie. They picked up. Gold has picked up. So dollar dumping is happening right now. And in some of the charts, we may be approaching critical levels, such as your Canadian dollar, your Swiss franc, getting to previous lows. So getting to potential breakout points. All right, so having said all of this, and because it's the open of the London market, we will start off by focusing on our euro chart. So what do I have for euro? Bullish trend overall, but we've had a pullback. How decent, how big was that pullback? That pullback saw okay, depending on where you pull your Fibonacci's, but the pullback saw almost your 38.2 Fib retracement for the rally for from end of January. Now, my main concern is how much of an upside do we have? Okay, because if I look at my chart, we have this high from last week at around 1418. So high to deal with from last week. I think this is from Monday, and we're very near that. Our working rate is 1402. You know, these are ugly situations for me. The charts are bullish, but we are just below resistances. So it's not something that we can buy into. All right, let's go intraday. How does the chart look like? Oh, let me check on something first. What is our average daily range? Okay, let me shift to our platform here. Go dailies. So average daily range for your euro is about 92 pips. And as far as today's concerned, how much price action have we seen? We have the we have the highs at 1406, lows at 1343. So yeah, we're also nearing our average daily range. So it's not going to be an easy buy right now. In fact, I'm thinking, will there be arguments to call for a pullback instead of pushing through the resistances? So let me go further. Let me go lower time frames. What are we seeing in our chart? Okay, so there's your ongoing breakout right now. A bit early. Okay, I'm not in a position to draw Fibonacci's given that the high for right now, the high for this for the trading day is at our current active candle. Okay, so it looks like we are not able to do something immediately. All right, so if we can't do anything immediately, what should we be doing? Well, we did say that we have this resistance. Okay, so what we should do now is monitor what kind of price action happens as we hit those previous heights, because before we saw that level, market consolidated and then saw a sharp pullback to a daily scale trend line. So is this thing here going to be repeated here over the next couple of hours? And the elements for such a thing to happen is there. Like we said, we do not have a huge catalyst for price action right now. Well, later you have data from the US. So I guess if you do have, okay, let's look at it this way. If you do have a consolidation later at this area, around 1415, and you start seeing Yeah, if you have consolidation there and you start seeing long wicks in your hourly charts, and then you end up with good US data later, then that could be argument for you to say, okay, you know what, well resisted chart, let's go look for some mean reversion, let's go look for a rejection from this level, from the previous high, from Monday's high last week. So no immediate buys for now, I mean for us, because we are too close to the resistance level. This is not a good idea to buy now, knowing that you face an immediate resistance and you've got a lot of room until you see your nice stop loss level, the low for this hammer in the hourly chart. So I guess what I'm trying to say is our bias actually has to shift to the possibility of this market dropping. So again, we should be thinking in terms of, are we going to get gravestone doji? Are we going to get shooting star at this previous resistance level, at the previous high, at the resistance level at 1415? Give me these kinds of candles, and to me, that is argument later to sell this with a stop loss above whatever the day's high by then is going to be. Another scenario is if you don't get any immediate gravestone doji, you don't get any immediate shooting star, rather you end up with, like previous Monday, just a series of candles that consolidates, then at that point you look for a bearish breakout. You look for where's the low of that consolidation and use the low of that consolidation as an entry point. You don't use the exact number, you put your entry slightly below that, counting on momentum to be there the moment this thing starts dropping. So no immediate shorts for us. We are just too close to resistances. But look for gravestone dojis in the hourly chart, shooting stars in the hourly chart as argument to go short. Alrighty, so let me move on to something else. Let's take a look at gold. Gold is interesting because we've been bouncing off the exponential moving average. Overall trend for gold is bullish, although at the same time, you've had a series of lower highs. So, what do we do? Just like your euro, you're approaching a resistance level, the highs from Monday last week. So overall trend has been bullish. We've seen a decent move already for today. Let me just check on something. High for the day is at 33.45. Low is at 32.95. So you basically have $50 of price action in gold already. What's your average daily range? What's our ATR? ATR is about $76. So okay, looks like there's room to maneuver in gold, at least as far as average ranges go. You could get another 26 if there's a bullish breakout. But let's see the charts. Immediate resistance highs from Monday last week, and that's at 33.65. So all right, working rate 33.45, 33.65. So yeah, it's saying that you potentially could have another $20 if you join the buy side of gold. But is the timing right? Let me go hourly. Okay, so previous R saw us with a sharp spike in gold. I think the more cautious approach here would be to try to get some form of pullback to your rally from last Friday's lows. So new hour, guys, I'm a bit worried about the extent of price action that we've had already, that I'm not excited to just go long in our gold chart. All right, so nothing immediate here. Let me just draw some support levels, potential bounce off point that's not fib based. I think you have these size here from before. Okay, we're using these highs instead of this high here, the outlier. Why? Because the more that a certain price level has been tested, the stronger we tend to think it gets. So we're not going to use the outlier for this. Can we draw Fibonacci retracements on this upswing? Well, let's see. Let me try to see this in the lower time frames. Okay, so we still don't really have a nice signal that says your upswing is over. Even the high for our high is even in our latest 15-minute candle. Okay, so I'm going to make some assumptions here. As we said, 33.26 makes for a good potential bounce off point. This area here, about 33.13, also makes a good bounce off point. But I'm just curious about where your Fibonacci retracement levels are. Although, like we said, I normally would not suggest you do this because the candle is basically active right now. Okay, so yeah, guys, I mean, this isn't something that you should be jumping into immediately. We do have room to maneuver, like we said. Your resistances are all the way up here from Monday last week, about 33.65. But I just do not relish being at the tail end of an upswing. So I guess there's no immediate buy for us. This market simply has moved already. If you want to chase it, it's not really a good idea. Your stop loss is just a little bit too far. Ideal stop loss will be below this 3325 level. And giving a working rate of 4.6, like I said, not the best place to try to go long. All right, so no trades here. Let's move along. Although honestly, I'm really tempted about doing something right now. The problem is we're just near our resistances, whether you're talking euro, especially for the euro. For gold, yes, there's some room to maneuver. But where else should we be going? Let's take a look at GBP. So we did not exactly pull back to our EMA lines. Big picture in GBP puts us where? All right, looks like this platform doesn't have the data. Let me switch to CTrader. And what do we have for GBP? We are at levels that we last saw in 2021. Early 2022, late 2021. So what do we know about cable? Let's drag some ATI. Let's put an ATR on this chart. All right, we have 98 pips for your average true range. The day's high is at 35.40, lows at 34.51. So again, it sounds like we've missed the boat on this one as well. There is room to maneuver as far as charts go because our objective here would be to try to get to this high from Wednesday. That's about 36. Let me just see that. That's about 35.93. So high from Wednesday last week is 35.93. That's a swing high. But again, the problem is you already have an ongoing move. So not a good risk reward to try to chase this. Okay, so what can we do then? We can't really draw fibs given that this is a working candle. We could look at previous price levels for potential pullback points. So we have 3505. It's actually just 30 pips away. Okay, guys, so not in a position to do anything. Would love to try to pick this up from this high from earlier in the day. I would use that as a breakout point. That was a consolidation. Those were consolidation highs before from Thursday. Given the limited upside, I'm not going to suggest that we chase this. Better to just look for better pricing. Better to just say, give me 3505 first. What about selling this? We do not want to go against the trend. And if you look at the big picture, the trend has been, a series of newer highs and higher lows. Okay, so I guess it's just not our day. We do not have good enough pricing for us to consider doing anything. Now, of course, it's always possible to exceed your average daily ranges. But normally you'd want to have a catalyst to think in such terms. And we don't have anything from the European market. We don't have anything in the calendar from Europe that says, okay, this is going to be a market mover. This would lead to sustained price action. We don't have it. Okay. Let me get back to our charts. I always find this to be a difficult situation when you've got nice clear trends, but you're also seeing that most of the price action for the day has already happened, has already occurred. Okay, where to next? Take a look at dollar yen. Looks like we have a symmetric triangle in our daily charts for dollar yen. We are in the process of getting to your support line for that. I normally would have wanted your highs from last week to be coming from the resistance. I guess my problem with today's chart is prices have just moved already. What do we do? Let me go intraday. Oh, it's also something that's running. Breakout has already happened. And we are facing a bit of a consolidation floor from rather consolidation resistance from before. Okay, just nothing good looks good in this chart. Things are clear, but you're facing an immediate support. So not a good idea to be jumping short just because you're bearish, not when you have a support coming up already at 143.03. Okay, so yeah, this is giving me a tough time. I'm thinking perhaps nothing today. Maybe tomorrow we get to do a bit of mean reversion. Maybe tomorrow we get to see something that says pull back to your moving average line. But for now, although you're bearish across the board, you're dollar dumping across the board, there's just not much that we could safely do right now. Too bad, folks. So again, I find myself with a no trade situation here. I'm feeling deflated being unable to join this market. Let me see your GBP. Let me see your euro again. So euro, we are at the point where we are testing the highs from Monday last week. We just don't have any catalyst for us to suggest taking any immediate action in this one. And there we go, folks. So we are testing that 14-15 area. What if it breaks? Okay, let's play what if here. What if we push through that level? What's next? Well, we push through that. It's not like we haven't seen 1.15 before. Okay, the high from April is around 1572. So there is upside to this. But again, the problem is the lack of catalyst for today. And the risk of getting caught with a buy at the high. But folks, so yeah, this is just not something that we would advise anyone chasing at this point. Um, if we fail to take out that 14-15 area, if we start developing a consolidation over the next couple of hours, then we may be able to consider shorts later. Okay, so no immediate action. I think at this point we have to consider the possibility that this thing is getting repeated. We have to consider, or we just have to look for either a consolidation in the hourly charts around this area that eventually breaks lower, or like we said before, clearly reversal patterns like shooting stars or gravestone dojis around this area. I'm actually very disappointed at this point. We are not in a position to do anything. Okay, looks like we are testing those highs. But given that we've seen average daily ranges, we do not suggest that people chase the buy side on euro. We do not suggest that people chase the general dollar dumping that is currently happening. All right, so uh, you know what's going to be interesting here, guys, is if the ISM numbers come out really strong for the US later, think about what kind of reversal we may be able to get. So let's revisit that. Let's take a look at those numbers again. So take note, guys, that market has been dumping the dollar over the last 2 hours, enough so that we are near average daily ranges as far as your euro, as far as your GBP, as far as your Aussie are concerned. Even in gold, we are nearing those average daily ranges. So market is, I would say, everyone's short the dollar right now. So if everyone sold this and we end up with something that's good for the US later, you can just imagine the potential for reversals from our euro, from our GBP, from our Aussie, from our dollar yen later on. So again, how do we interpret the data later, guys? ISM manufacturing PMI, this is a leading indicator. When you say something is a leading indicator, these are soft type of data. Okay, these are survey type data. Anything above 50 is considered to be good, while anything below 50 says the sector is contracting. Your consensus is at 49.3, a bit of an improvement. If we end up with, say, what if we end up with a 50 for manufacturing? That's neutral. That means that at least it's not shedding jobs, it's not shedding output on a macro scale. So you end up with 50, then that's going to be very detrimental to what is currently happening in our charts. And if you add to that, what if your prices index, manufacturing prices, also come out strongly? So yeah, at this point, guys, I don't think that there's really much that we can do with these charts. We will just be waiting for potential reversal candlesticks. We will wait for the possibility that your euro, your GBP, your gold, as they hit resistances, let them consolidate in the hourly scale and eventually break lower, especially if we also have strong US data. You've got that kind of combination, and yeah, I'll be a seller at that point. For now, no immediate action. So guys, I think we'll end things here. we're really not in a position to do anything at this point. We are about, let me check again. We are about 6 hours and 25 minutes away, or rather 6 hours and 35 minutes away from the release of data that could potentially reverse what's going on in our charts. Okay, right now you have dollar dumping. You are seeing average ranges. So let's see how the market reacts in 6 hours and 35 minutes when you have ISM data released from the US. Okay, so guys, thanks for joining. Oh, on Wednesday we will be doing our session on using generative AI to code for an indicator. I've been talking about this for a while now, and I've been saying how I wish I could have an indicator, or rather how I wish I could have a robot where I could just tell the robot if the prices reaches a certain level and you start seeing shooting stars, or you start seeing hammers, gravestone dojis, dragonfly dojis, then go reverse or go take a sell or go take a buy at that level. So that's going to be a problem that we will try to solve through an EA or a CBot. I'm not really sure which platform we'll be executing, but you know, if you're using generative AI, it's a matter of prompting. You can just tell your Grok or your ChatGPT that you want this in CBots, or you want this for an EA in MetaTrader. Okay, what's important is the instructions that we give it in order for it to execute the idea that we have properly. So guys, I'll see you for that on Wednesday. Of course, we'll also be doing our normal London coverage on Wednesday as well. Okay, so thank you again for joining, and see you on Wednesday.